and welcome to the next video in accounting, T accounts. Now before we start talking about how T accounts work, we need to define some concepts first. Let's start with an account. An account is a place where you can record, sort, and store all transactions affecting a related group of items. A T account specifically is a visual representation of an account. Here we have a few more definitions. Debits and credits. A debit is a destination of economic benefit, while a credit is the source of an economic benefit. Now let me try to explain what this means. As mentioned in the first video of this section, accounting is all about recording transactions. In every single transaction, there is someone who gets the money and someone who loses the money. A debit is where the money goes to in a transaction, and the credit is where the money comes from in the transaction. Some examples of debit accounts are assets, expenses, and dividends, while some examples of credit accounts are owner's equity, liabilities, and revenue. Now, hang on with me. If you're still confused, I'll elaborate further in upcoming slides. Now moving on to what a T account looks like, it's exactly what's implied by the name. As you can see, the borders are shaped like a T. At the top, you have the name of your account. The debits are always recorded on the left-hand side of the T, and the credits are always recorded on the right-hand side of the T. Sometimes you will also have to write the date next to each debit and credit transaction. Now let's take a look at a few examples. I already mentioned that a large part of accounting is recording business transactions on T tables. For the first one, let's use the example of a sale in a business. Say we are a bookstore and we just sold $5,000 worth of books to a customer and they paid me back in cash. We just lost $5,000 worth of books, however we gained $5,000 in cash. So in other words, our $5,000 of value went from the books to the cash. Then our books account will be credited and our cash account will be debited. As you can see again, credits are always on the right and debits are always on the left. Let's take a look at another example. Let's say the same bookstore or business took out a loan a few months earlier in order to pay for its inventory. As you may remember from the loans video, the way to pay back most loans is by paying monthly installments to the creditor called EMI. Now let's say this month's installment is $1,000. Which account will be credited and which account will be debited? In other words, which account will gain money and which account will lose money? I'll go ahead and give you 5 seconds, or if you want, you may pause the video as well. Okay, so if you answered the cash account would be credited by $1,000 and the loan account would be debited by $1,000, you are correct. Finally, let's end off the video with some key takeaways. T accounts are simply visual representations of an account, a group of items. In every single transaction, there will always be a debit and a credit. Finally, in a T account, debits will always go on the left and credits will always be on the right. That brings us to the end of this video, and see you in the next one.